Weekly stock market update part 2. Okay, now this is more for information rather than anything else. The biggest risers on the S&P 500 over the past month. I don't think I'm going to comment on one or two of these as we go forward. The worst fallers, you can pause it if you wish, and why we got out of Tesla I'll come into a little bit later, back in October of last year. The risers, again on the FTSE 350, no comments on any of those, and the fallers. I'd like to say I'm the single-handed cause of the demise of St James's Place, but I'm not. Their fund managers and their IFAs are, and their whole business model, and the fact that, quite frankly, I think they're not on the up and up with you, let's put it that way. I'll speak to my lawyers about saying something more stronger about them, but then again, what hasn't already been said in the Sunday Times about them? S&P 500, I'm anticipating that to go up as it has done in the past. Just watch out, and these are weekly charts, that you can have 4 or 5 down week moves and still be on an upward move, right? So still positive on that. That was my projection, which looked ridiculous back when I did it, but now looks more realistic. The FTSE's had a bit of a boost up. Somebody's done a heart massage on it, and it's not dead by the looks of it. But I'm sure, like an old man climbing up a hill, it's still going to run out of breath and become mediocre again. Nasdaq, more room to the upside. As you know, on the Great Investments Program, I do look at UK companies as well and provide them. I just don't buy them, but I tell you which would be eligible. So that's where we're looking on this. Now again, remember with the Nasdaq, or with any index, these are monthly charts. You can have a month or two down and still be on a strong upward move. Look at that. So how do we not panic? Well, if the MACD is rising, that's good. If it's flat, that's an amber alert. And if you're risk averse, you start being on high alert. If it's falling, then if you're risk averse, you're probably starting to exit. If you're risk loving, you still do nothing until the risk loving people get out when it crosses. The risk averse ones get out when it's falling. Okay. Apple, I got sold half, as you know. I continue holding the other half. I sold half because it had fallen below its signal line over there. Now, Apple's one of my quality 5 picks, as are the 2Ms and the 3As, which means I anticipate getting back in at some point, but it'll need at least the MACD to be rising, if not above its own moving average. Okay, and it was good to pocket some gains anyway in that. Great investments only. Microsoft, I continue holding. Would I buy more? My son's got a 2 times leverage Microsoft ETF in his junior ISA, so he's doing rather well. Amazon, Disney, like it still, and still continue holding. Don't forget, on YouTube, there's more stocks to come. Don't forget on YouTube why your pension manager IFA should be locked up. alpeshpatel.com/links will show you all of that. Now, Nvidia, or any stock which is going up more than you anticipate, what do? Well, you don't sell in advance, otherwise we would have sold it, because then I thought it was going to fall. Why didn't I not sell? Well, because the MACD wasn't falling, basically. If it was flat, I don't need to do anything. If it's falling, I might sell some. If it's falling below its signal line, like that, then there'll be a reason to sell, but none of that's happening. So when do you sell? If it drops X percent, e.g. 10, 15, 20, 25, drops X percent, then work out what your Y is. Do you sell 20% of your holdings, 30, 40, 50, 100? That'll be based on your risk appetite. If you had a time machine, you'd know exactly what that number should be. Okay? Tesla, as I said, we've already got out of in last October, having made a rather good gain. And the reason we got out was it was a special situation on the Great Investments Program to begin with. So it was one which, when I wanted to ease off on my equity exposure and it was below its own signal line, I thought, right, this is one of the ones to carve out, get rid of, and we have. Meta, same strategy as Nvidia. NXP, fine, still got a long way to go on the momentum on that one, and Qualcomm still got some way to go, so happy with that. ServiceNow, Great Investments Program only, got some good special situations I'll be putting up on the private channel on there. Netflix I don't own, as you know, but it's one I've been covering since it had those results, so from that point, and it's been doing rather well. Why don't I own it? Did I miss a trick? No, I can't buy everything, and it's done rather well. But I guess with this as well, if it drops X, sell Y, just like there, because you don't want this to happen. And you might say, that's fine if it drops, Alpesh, look, I'll just buy it and hold it, goes back to where it was. No, that means over 2 years you got a 0% return and you withstood, what was that, a 60% drop. Why would you do that? And you didn't get any of this gain because you were just paying your debts off that drop. Pointless. The buy and hold strategy is ignorance multiplied. PayPal, another one which is out in the news a bit. Paresh likes it, my colleague, but it just shows that MACD is not the only thing you should ever look at, because look, that won't give you the answer. Don't forget, on YouTube, got over 1 million views looking at Scottish Investment Trust, 7 investment managers, Bailey Gifford, a whole load of funds on there as well. I'll do part 3 in a second.